Euro pressured versus US dollar with ECB repricing. Societe Generale. Gold price forecast. Gold's euro US dollar remains capped below 4,580 amid cautious markets. Indian rupee gains ground due to oil prices correction, RBI's intervention. US S&P Global PMI expected to highlight steady economic growth in May. British pound declines against US dollar as US-Iran deal optimism fades. Morning bid, shrug for Nvidia, but IPOs excite. Oil rises over 1% after Reuters report signals complication to US-Iran peace talks. Swiss industrial output shrinks 7.1% in Q1.
Fishing boats worldwide tuck dockside as diesel prices surge on Iran war. Australian dollar Soft data but bullish year-end view, ING. IEA. Chief Birol. Oil markets could enter red zone in July-August.
FTSE 100 drifts lower on higher oil prices, weak PMI data. Bank of America maintains a near-term bullish bias on the US dollar.
FOMC minutes back extended hold. TD Securities. wavers above 8-week lows, with US preliminary S&P Global PMIs on tap. Hong Kong inflation remains stable at 1.7%. Australian dollar underperforms due to risk-off mood, weak Australia labour market data, British pound. Rebound on easing fiscal and inflation fears. MUFG.
Sorry, something came up. Almost ready. I just need a couple more minutes though. I guess we can start at the top of the hour. Makes sense. Sorry about that. 2 minutes. Coffee should be done brewing.
Mexico retail sales year over year came in at 2.9% below forecasts, 3.1% in March.
All right,
Mexico
I'm
retail
here.
sales MOM came in at 0.1% below expectations, 0.5% in March.
All right, let's go. Boom. Bum, 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 bum. Bum, 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 bum. All right. Hey, da boo boo. Welcome to Forex.Today, the YouTube community of more than 20. Why am I doing Yogi Bear? I don't know. YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. And by the way, I've said that exact word for word disclaimer going back to before Google bought YouTube. That's how long I've been putting videos on YouTube. Before Google owned it, you're like, wait, Google didn't invent it? Yeah, so that's a very long time. Oh, look how dark it is. Well, it was oversaturated before. All right, that's a little dark, don't you think? Yeah, I think maybe we can improve on that, but not right this second. Anywho, so it's so dark in Wayne's office. Hey, so what do you want to do today? Some technicals, some fundamentals? Huh? We got housing starts coming out. Are you excited? only 26 minutes away. Going to go through the charts, answer the question, are we risk on and risk off? What we're going to try to do is align our trades with actual market conditions. Sometimes the long term and the short term agree, sometimes they don't. And it's not the survival of the fittest, it's survival of the most adaptable. Can you adapt? Well, not if you're not even aware of changing market conditions, huh? You got to be aware if you're going to adapt. So that's what we're trying to do. Think of it as ethical and moral and legal inside information. We can look at the markets, do the math, not assumptions, but do the math and derive what institutional investors are doing, and then we want to trade along with them and not against them. Can we go through the stance? Yeah, okay. I don't know about member by member, but we've known it's been a mixed bag for a little bit. So there was a question about the FOMC. Now, there's a way to do it, okay, FX Bryant? One way to do it is you can read the report, read multiple meeting minutes going back quarters. Now, when you read the meeting minutes, it doesn't say Myron said this and, whatever, right? It doesn't say who said what. U.S. dollar index, consolidation below key resistance, OCBC. It says some members were mentioned, some other members mentioned, that kind of thing. So, but you can go back and try to, discern changes of opinions. We can do that, and I've actually started building an app for that kind of thing. It's just not the highest priority right now, but we have another way of analyzing the Fed members' dovish hawkish stances. So all institutional investors that put money into treasuries, and of course others that put money other places, but all institutional investors would have had a team. They would have had an analyst that would have read the report.
Pound steady as UK business activity falls to 1-year low.
And then analyzed it and provided reports either internally to the trading desk or to the research team on the sell side. Okay? So just imagine many, 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 many people have done what you've asked for. Okay? Now, well, beyond the dot plot. I mean, so what's on the mind of the world right now is not the dot plot. It's the FOMC meeting minutes that came out yesterday. So when you're listening to the news about the board was mixed, okay, that's what it is. Okay, so that's what is up in the air now. The way to do it mathematically is you go to fundamentals, you go to rates radar, and you can analyze. So we're getting this from the Federal Reserve Economic Database. This is the Fed. And we can analyze mathematically the importance of what it means to have a mixed Fed. The importance of what it means to have a new Fed chair stepping up at the next meeting. The assumed next dot plot based on this mixed FOMC meeting minutes, because that people could say, well, we have a mixed board, so the dot plot's going to change, and then then the quants and the PhDs get together and try to figure out logically what this, how this would change the dot plot. Remember, We're talking about firms that put billions and billions and billions and billions and billions into these markets. So they take the job quite seriously. So they're doing all this work to figure out the next dot plot. Also, we know Warsh will probably try to kill the dot plot in the future. So then they're trying to come up with other ways. Here's what I'm getting. Once all of these experts are done with their analysis, they have to deploy their capital. So I can't tell you what their opinion is, but I can tell you what the logic is. I don't know what they were thinking, but there is a logic to go long certain parts of the yield curve and go short certain parts. And okay, so I don't know what they think or how they feel, if they're giddy or scared, but we can track the money in aggregate and then derive the implied interest rate of their future investments. So it's not guessed. So they put, let's say, $1 billion into an investment that, how you say, implies that the Fed funds rate will be 3.79. We're at 3.75. So Monday, Tuesday, Wednesday. Hey, Mike, I speak in English. Sorry, I went into Godfather there. The vast majority of investors right now, about 70%, about 72%, believe the Fed will not hike at the end of the year. And that's what they think about the members being dovish and hawkish, their stances. Based on all known information, including those meeting minutes that came out, and everyone's assumption about the future, and all the aggregate of all the research, and in particular, not the research, the positioning. Are they buying or selling, and when and where? Okay? And that's pretty cool. So that's what the world thinks about the dovish, hawkish stances of the FOMC members. Okay? What do you think about that? No, dovish means cutting interest rates. Hawkish means raising interest rates. So the next meeting, there's a 98% chance. Actually, we can round it. How about this? 97.5, 97.7. I might as well just do it. 97.7% chance the Fed will not hike based on at least $1 trillion worth of investments. By I don't know, the aggregate of all research departments on the planet. So that's what we believe, not believe. This is what the market thinks right now. Okay? And by the way, we have this for every other central bank. And I will have you know that we are not pulling this data from some third party that says, pay us money and you can, this is actually, we pull the entire yield curve of all treasuries from all central banks, G8 central banks, and then we do our own calculations. So, yeah, right? Yeah. We had to pull thousands and thousands and thousands of data points and then do the math on all of them. And they change all the time. Okay, so the ECB, okay, we pull this from the Federal Reserve Economic Database. It's St. Louis. What's up, St. Louis Fed? Okay, this is what they have done, and this is what is implied when we do the math. So, based on what the entire institutional world has invested on, they are no longer cutting. They've been on a massive easing cycle. Mathematically, that is dead. 80%, 80.8% chance on June 10th, the ECB raises interest. Well, so what do you think? Is that going to make the euro appreciate? Well, that's an institutional style question, isn't it? Now you're asking the right questions, right, Brian? Hey, if the ECB raises interest rates on June 10th, will that make the value of the euro go up? Well, in that case, maybe I should front run it. Oh, really? Here's another way of thinking about this, everybody. You see this? Institutional investors are already front running. They've already done it and will likely continue if their opinions are the same over time as data comes in. But they're already doing it. This is what TradeR seeks to do, is show you what institutional investors are doing. This isn't us like sort of guessing. This isn't like Wayne's opinion. This is simply what the institutional investors are doing if you pull the data and do the math. That is a fact. So you probably went through your first 10 years of trading Forex not even knowing this mattered. And now you see it. So are you going to change your behavior? Oh, well, hell's bells, right? Hell's bells. That's a big question. Hey, you guys want to see something cool? Let's ask a new question. I'll come back to the risk one. I'm going to ask you a new question. Let me know if you care about gold. Would you like daily analysis about gold prices? Would you like to know the supply and demand of gold? Would you like to know central banking purchases and sales of gold? Would you like to know which central banks are buying? Would you like to know which ones are selling? Would you like to know how much gold is being produced by miners? Would you like to know demand by jewelers? Would you like to know demand by the tech industry that might need gold to make electronics? Hmm? Would you like to know what the gold price is likely to be soon? And would you like to know what the gold price is likely to be at the end of the year? Did you did you fill out the little form, or maybe you're on your phone and it doesn't do the survey? Let me know in the survey. 2/3 of you haven't even done the survey. What does that mean? Really, 2/3 are what? Yeah, it's funny because I don't watch YouTube. I've almost never watched. I don't. I've almost never even watched a Forex live stream like this. I've always done them, so I don't know. Maybe you're on your phone and it doesn't work. But anyways, we'll move on.com. I'll go ahead and end the poll. All right, check this out. Okay, how about this? All right, there's the live gold price, but it's telling you that gold prices are falling, especially over the last 30 days. We have a projection cone going out 90 days into the future. We're tracking the gold silver ratio. Silver's winning. We're tracking the dollar. Dollar's getting strong. One reason why gold would come down. We're also tracking the yield on the 10-year T-note minus inflation, CPI. And so we're tracking real inflation, right? This is the real yield minus inflation, right? The yield, the real yield. And of course, if it's rising, that's when you start to hedge with gold. If it's not rising, there's less need to hedge. That's not an incredibly bad number. So there's no reason to hedge. Interesting, huh? So in the next 90 days, we could be tickling 4,000. By the end of the year, okay, we're eyeballing 6,000. Okay. This is based on the Commitment of Traders report. How much gold is in the vault going back to the beginning of the year? Aiden is our AI. I named him Aiden because he helps me, because he provides assistance. He's an aid for traders. Yeah, anyways. So this is how much gold is in the vault in the United States by institutional investors. Okay. Here's the 1 week change, the 4 week change, and the 8 week change. And we're measuring these in contracts. Remember, we've taken out hedgers. Okay. And here's the change in how much gold is in the vault week over week over week over week. So we went through an accumulation phase in here, and then a selling phase here, and then a fizzle phase, and then kind of a dippy phase, and then a buy it back phase. And right, so over the last 8 weeks, it's more bullish than bearish. This is where we're slowly adding gold to the private vaults in the United States. Then we look at how much gold is being produced. Now, I go into the Federal Reserve economic database, and there's lots of mining data. And what mostly gets reported out there is all mines. So it could be copper, it could be, I don't know, fossilized platypus bones. I don't know. All miners. So we break it down to the most minute data that I can get from the Fed, and that's specifically gold and silver miners. So it's a subsect of a subset of a subsect. So it's pretty gosh darn accurate for what we need. And if you trade silver, this is helpful to you. There's no way for me to separate the gold from the silver. You're like, hey, Wayne, have you tried mercury? No. Excuse me, hang on. In sooth, I know not why I am so sad. So anyways, this is how much gold and silver is being pulled out of the ground right now. Okay. Cool. Can you see that the volume over the last few periods here? Excuse me. Have been falling. He's put them in a weird order. Sorry, I'm stuttering with my brain here. What did he do? July 25th, September 25th, November, October, January 26th, December 20th. He's organized them by biggest to smallest and not by date. How fun is that? All right, I'll fix this. But here we are, March 26. Here's February 26. Here's January 26. You notice the amount of gold and silver that we're digging out of the ground is getting smaller and smaller? That's supply, bro. Now, over here, and we're working on this as well. This needs some improvement. My intent here is to get all G7 central banks. The question is, do I have the data? I think I do have the data, but this is still a work in process. I want to show you the G7 activity in gold, buying and selling, plus the biggest buyers and sellers. So Poland is buying a lot of gold, and Turkey is selling a lot of gold. But what about the United States? What about Great Britain? How about Canada? So on and so forth, right? What's Japan up to? And are they buying gold or dumping gold because of oil? So if they sold gold, then people would need yen to buy it from, driving up the value of the yen. So now that 1 yen buys more oil. So they sell they sell gold to buy oil is essentially what it is. Okay, so is that happening? So that's where I'm going. And this is a lot of data. And so he's struggling on how to obviously display it because he didn't do this quite right. I mean, we worked on all kinds of different variations of this and different coloring of it and everything. And I like the general format, but I just didn't notice that he's not putting it in chronological order. Oh,
Spike alert, 1 minute until United States Philly Fed CapEx index is released.
thank you, JGB. That's important to me. Thank you. So I guess we'll come back to this.
Bank of England's Taylor. Probably correct to expect need for rate hikes under Bank of England's Scenario C.
The US dollar is mostly higher, modestly, to start the no American session. What next, technically?
Trading NASDAQ today. NQ bears hold the edge below 29,313. Bulls need 29,427 or
Ripple price forecast. XRP lags recovery. Despite rising network activity, mild ETF inflows.
Euro growth worries cap upside against US dollar.
United States Philly Fed CapEx Index actual 11.7% met forecast.
Met the forecast. It worked.
Investing live European markets wrap. Risk retreats as Iran defends nuclear position.
So, Kiwi Ripper Strong, Aussie
US
Ripper
dollar
Strong.
index. Consolidation below key resistance. OCBC.
CAD, super weak.
Mexico retail sales year over year came in at 2.9% below forecasts, 3.1% in March.
Dude, AI is crazy, right? Imagine all of this is happening while you're on your charts. You never have to take your eyes off the charts, huh?
United States Philly Fed CapEx Index actual 92.2% missed forecast.
Cool. It's neat.
Australian dollar jobs miss secures June pause. TD Securities. United States Philadelphia Fed manufacturing survey came in at 0.4 below forecasts, 18 in May.
United States building permits change rose from previous 10.8% to 5.8% in April.
Cool, right?
Wall Street might edge down at open.
Jiminy Cricket! Hey, lots of news happens at 8:30, huh?
U.S. initial jobless claims 209 KVs, 211K, EST, close to expectations for weekly jobs. United States continuing jobless claims registered at 1.782, below expectations, 1.79 in May 8th.
Damn, there's a lot of news. This is all like coming out, like right now. It's amazing. All right. Let's go back to gold. Well, just in case you don't look, I think almost everybody here already subscribes to TradeRs. But if you don't, and you're like, well, Wayne, why don't you put me into a trade? Why don't you do your own work, bro? Don't embarrass your mother. But wait, is that true? Is that right? Well, yeah, look, actually, look how flat that is. Interesting. Okay. Here's what you should be focused on right now. They're not happening yet, bro. You're a bit early. All right, cool. Even better. So let's go back to our gold radar. Okay, so I want the G7 and then the biggest buyers and sellers. And then I asked Aiden, I think I said G8, so plus China, plus India. And then, you know, like Ecuador's been doing some activity and stuff. Look at the Uzbeks. And I'm like, okay, Uzbekistan's a nice place. It's got a lot of history. There's some interesting things going on. I also would love to, besides Uzbekistan, visit Azerbaijan. Yeah, Baku. I've always wanted to go to Baku.
on the Caspian Sea. You're like, Wayne, you're joking, right? No. I studied oil. So I know a wee bit. So I would love to visit. But do I really need to track? Well, only if it's very significant. And, yesterday, Aiden gave me like 30 central banks. And, he's like, well, do you want to know what Ecuador's up to with gold? I'm like, no, I don't. It could just be aggregate. So I'm still teaching them, and myself trying to figure out how we want to display this. So anyways, this is where we're going. Poland's buying, Turkey selling. Now, why does this matter? Well, why is Turkey selling 70 tons of gold? 70 tons. Well, they have a very poor economy. Now, it's self-inflicted. Turkey's a wonderful country with wonderful people, and they could be doing so much, but they don't. They do nothing. On a global scale, they can do a lot. They basically do nothing. And other countries don't do business with them anymore, which means there's no foreign exchange, essentially, with Turkey. It's very, very little for the size of their economy. Very, very little foreign exchange. What that means, the Central Bank of Turkey has no dollars and has no euros in its vault. However, I think the technical word for it is they have a shit ton of debt. And their debt is priced in euros and dollars. But they don't have any euros and dollars because they don't do any business anymore with Europeans and American businesses because they're not either Turkey's not doing anything or Europe and the United States doesn't want to do business with them anymore. And like I said, I think it's a self-inflicted wound. Okay. So anyways, that's that. So I'll give you an example now. So let's say they have a big debt payment coming up in dollars, and there's no dollars in the central bank's vault. The repo man showing up, what do? You sell your gold Rolex. And you can see it. This is lack of foreign exchange reserves at the Central Bank of Turkey. And they're selling gold more than anybody else on the planet because they have massive levels of debt and no cash to pay for it. Hey, what's the value of the Turkish lira? Okay. It's almost nothing. So is there a correlation? I don't know. So you could say, okay, go to your chart, check out Turkish lira. Is it weak versus dollar? Is it weak versus euro? That might explain what's going on. And then go to your Polish zloty chart. Is it strong? Okay. And now you might be... Hey, thanks for the coffee, Brian. Now, okay, so I got to figure this out. It shouldn't be doing this. All right. So anyways, that's where we're going. So it can't get any better, right? What do you think? You like it? Oh, it gets better. Shut the back door. All right. So now we're breaking it down by looking at mining production and recycling. Why? Why not? Don't spend all of it on the yellow. Yeah, I'm starting to hate nice cars. Now I like nice cars. And I drive nice cars. And every day which I don't drive them very much, but when I walk out to my car, I'm like, damn, that's a nice car. And then I get on my hands and knees and I pray to
United States
God,
Philly Fed
nothing
prices paid
breaks.
actual to 19.9% met forecast.
I pray to God nothing breaks because it's so stupid. Yeah, see, the problem is I grew up poor, right? So you take it into the dealership and you're like, my key fob is broken.
United States Philly Fed prices paid actual 17.56%,
right.
missed forecast.
Aiden and I are working on this. All right, so I turn it off, but he still says it. All right, we're working on it. But anyway, so here's the thing on that. I basically need a new car key. So I go into BMW. It's $800 for a car key. Like, what happened to the 50-cent car key? Oh, well, this key fob will allow you to drive your car backwards so you can, if you're in a tight spot at the airport, you can start your car with your key fob and back it out without even getting into the car. I'm like, what the hell? What is that going to happen once? In the time of ownership, like, you really spent all that time in engineering doing that? It backs itself out without you getting into the car? You're like, I don't want to spend $800 on a key. That's just stupid. So anyways, and for you guys that have even nicer cars than that, you know, like you have race cars and stuff, you're like, you know, when you talk to race car drivers and like, yeah, I took my car out to the track. We did a bunch of laps. It was great. We went through $6,000 in tires. And then I blew the engine. You're like, whoa, dude. But anyways, back to reality. Oh, there goes gravity. Okay, so there's some more. You know, I'm trying different ways to measure supply. And here's different ways of tracking and measuring and reporting to you gold demand. Break it down by tech, by jewelry, by investment, this like COT type stuff. Central bank purchases and ETF purchases, because this is a new flow, isn't it? You put money into a gold ETF, and now they got to buy some gold. Yeah. And then I explain to you how we do it. Cool, right? Hey, Wayne, what do you think about gold? That's what I think about gold. Hey, Brian, what do you think about gold? That's what you think about gold. Cool. Notice, okay, an EMA weighted seasonal projection using 20-year historical monthly patterns with a standard, with it shouldn't be standard one, well, what this is saying is one standard deviation confidence band. That's not quite what I asked him to do. So I'll probably change that confidence band. I don't want him to add one standard deviation. Actually, he probably just this title might be misleading. He's supposed to be looking at, you know, the standard deviation, the standardization of variance over time. And so he's just saying, based on right now, the standard deviation. But what I want him to do is go back 5 years and say, what's the standard deviation in May, June, July, August? Okay, so he skipped some corners, although here he's projecting higher volatility. All right, so I have to check the math on here. It's right, but I want to change some variables, right? So anyways, it's not like it's wrong. Now, what's wrong is this should be a different background color. Okay, why is it different? I don't know. But anyways, looking at this, what do we see here? Projection, short-term projection, and for, institutional investors, 90 days is short-term. It's like a scalp. What does that do? It gets us basically down to here again, which is called a double bottom, right? So we double bottom right around Canada Day. Did you notice that? Then what? We fizzle sideways for the summer, and then gold goes up September, October, November, December. And it could be a $2,000 rally. And you're like, well, how do you guess that? Well, sure, it's a guess. But again, we use an EMA-weighted seasonal projection using 20 years of historical monthly patterns with standard deviation and seasonality implied in the math. Dude, like, what? This ain't 7th grade math anymore, is it? No. So anyways, it's as good as I think we can get for now. I've run out of ideas. I mean, yeah, I think I want to have a better standard deviation, but it's not going to change the shape. The premium difference of calls. Yeah, well, okay. I'm not tapping into a data source for that. But I met with a hedge fund that does look at unusual changes in premia in the options market to anticipate changes in gold price. Hey, Prince, I'll get to that. We're not far away. But I put this gold analysis at a higher level. We'll get there. The MetaTrader tools. The major delay for it is I have in my brain ideas to improve them. So not only do I want to release them, I want to improve them. Get rid of the crap we don't use. But also, I want to rebuild everything from scratch with all the new tweaks I want. But also, my true vision is that the new MetaTrader tools are based on tradars. Like, they actually pull data from tradars. Or to say it even differently, I want to build tradars into your MT4 or MT5. I guess it has to be MT5 if I'm going to do that. But wouldn't it be cool if all of this data was inside your MT4? Or sorry, MT5. I'm so used to saying MT4. Wouldn't it be cool if your MT4 looked exactly like this? I mean, this exact page. Inside. So you log into MetaTrader platform, and here it is. You don't see the charts. You see this. You see our analytical platform. And so you've decided based on your analysis that you want to buy dollar pairs today, right? You want to sell the US dollar. You think it's risk on. Now, I'm not saying these charts are. In fact, these are not good charts. But wouldn't it be cool if you just went, oh, let's start with this one. Bang, bang, bang. Okay. Or let's say you do it this way. Okay, you want to do a day trade. Market is at the U.S. market open. These are the 3 best opportunities. They're all mediocre pass. Mediocre pass. Okay. And mediocre pass. So they're all, in fact, now I'm getting all disdained. I'm like, yuck. I haven't seen anything. And I just went through, by the way, I just went through like 30 pairs in 15 seconds. 30 15-minute charts in just seconds. But instead, let me do this even faster. Let me just see what I should be doing. Still nothing, really. There's still nothing to look at. So I'm gonna have to go back and just make up an example. So let's say I wanted to buy these 3 pairs. Wouldn't it be cool if you just clicked buy? Right? You went buy, done. Because we organize all of this by best opportunity long and then best opportunity short, right? So if you were interested in trading dollar pairs today, okay, the 3 best longs would be right here. So it even organizes, you don't even really have to scroll down, because if you were going to go short the US dollar, you would long these 3 first. Well, I guess you'd have to sell that, which shows you the mediocrity of her situation. So yeah, so I look at that, there's nothing to do. If there was, these would be your 3 best opportunities. But the fact that like this is flat, this is kind of up, but this is very up. So Kiwi and US dollar are the same price. Aussie's a little bit stronger than US dollar, but US dollar is way stronger than CAD. So really what this tells me, if I was going to do anything, I would do Kiwi CAD. Now, I've been doing this a long time, right? So I can spot that quite quickly. And even then, they're mediocre. So now I've gone through 3-4 dozen charts in seconds. And you know what I just confirmed? This damn page is perfect. Thank you. Thank you, traders. I can just sit here now. Let's dumb it all down. Because somebody said yesterday in our internal traders meeting, he's like, dude, I love this page. And I'm like, yeah, it's enough. Let's say you don't understand fundamentals, you don't believe in it, you don't get it, you don't like them, you think they're fake, whatever. Okay? If you believe in only price action, you're like, price action is the truth, everything is in the price. Maybe fundamentals are real, maybe they're fake, but it's the aggregate of what everybody thinks and believes, so it's in the price. Now, I don't quite think that way, because fundamentals help me predict a week, a month, a quarter, 6 months, a year in advance. So like I just showed you what gold is going to do by the end of the year based on my research. Now, I don't know if I'm right, but I have a lot of data that suggests it increases my probability of being right. But more important, if I am right and those things do come to fruition, I'm mentally able, through confirmation bias. See, we all have confirmation bias. It's always pitched as being a bad thing. Well, if you have a trade plan, confirmation is a good thing, because you're like, oh my God, it's doing exactly what I thought it was going to do. I'm going to take the trade. And I'm going to let the sucker run. Okay? So anyways, let's get back to my point. You could just sit on this page and wait. And when a trade appears, based on technical analysis, now, not patterns and not moving averages, okay, not oscillators, just price action. But every single one of these, okay, so there's 28 no opportunities, right? There's no opportunities on the 28 currency pairs that we track. Now, to get this CAD yen, it takes 14 calculations to get the data we need, and then a 15th calculation to create to quantify the opportunity. So it's 15 times 28. Sorry, I can't do that in my head. I can get close, but 15 times 28, right? Okay, 420 calculations every second. Look, you see it? They keep changing. We're doing 420 just on this one page. 420 calculations a second to put you into the right trade. So an amateur trader would have already made a bunch of trades by now, and it's discovered that nothing's happening. Okay, now if you want to know the longer term trends, here they are. If you want to know the medium term trends, here they are. But what's happening right this second? Nothing. Right, Mayor? Okay, Wayne, what do you think about CAD yen? We talked about that yesterday, right? Wayne, what do you think about CAD yen? Okay. This is what I think about CAD yen. I don't think anything about CAD yen, except in the next 3 weeks, 4 weeks, 5 weeks, it's going to turn bearish. The only thing that's unique this year is, well, geopolitics pushing up oil prices, impacting CAD, and the central bank intervention risk of yen. So geopolitics would, right? Geopolitics would push CAD up. Central bank intervention would push yen up. So what do I think? I don't think anything about it. We've analyzed GDP, inflation, unemployment, interest rates, did comparative analysis between the two economies. I'm watching institutional and retail positioning and flow, looking at seasonality. I'm looking at price changes. And, right, when I'm all said and done, I don't give a damn about CAD yen. And that takes seconds. Now that's long term though, isn't it? But what we want to know maybe is, what if it's ripper hot today? What if it tanks today? Well, if it tanks today, this is going to pop up. It's going to say sell CAD yen. And it's not going to think about these scores that I just showed you. It's not going to think about the differential between GDP between Canada and Japan. Now, I think about it. It's not going to think about seasonality of what that pair typically does week over week over week. I think this way, but that is long term. What it's doing now, price doesn't care. It is what it is. It's just what's happening. There's no rationale, but it's the truth. Now, what it doesn't tell you is what's the likelihood of it running. So if CAD yen skyrockets today because, let's just call it geopolitics. Well, it'll just show you. There it is. How long will that last? I don't know, because my seasonality shows that it often does okay in May. It does okay in June, but will peak out somewhere in June, somewhere between the first day of June and the last day of June. CAD yen tops out and then drops from there all the way to July. So it could fall for 6 weeks. So up for 4 weeks, or kind of like sideways for 4 weeks and down for 6. Yeah, that's a big fat giant maybe, but that doesn't tell me about geopolitics. Because we didn't have this situation 20 years ago, 18 years ago, 12 years ago, okay? 92 weeks ago, 62 weeks ago. Okay, so there is uniqueness in our situation, yet there's the normality. Okay, cool. So, but if it takes off, right? So normality gives you the courage to let your winners run if it's flowing in the direction of the normal trend. If something else unique happens, don't you need to know so you can adapt? Remember, it's not survival of the fittest. It's the survival of the most adaptable to changing conditions. Instead of environmental conditions, we're talking about market conditions. Okay? Everything you know about Darwin is wrong. He wrote that book, The Origin of the Species, in his 20s. At the end of his career, as an old man after studying nature for another 30, 40 years, he wrote another book, and he said his first book was wrong, but yet you were taught Origin of the Species in high school or whatever. And yet Darwin himself said it was wrong. So if you believe in Darwin, now I know people have a different sense of history, view of history, belief in history. So when you're like, phooey. Well, either way, you can listen to the young Darwin, what he thought at the beginning of his career. And of course, he wanted to get famous too, didn't he? He's young, ambitious. I'm going to go to the Galapagos. Yeah. But what did he write as an old man? What was the sum of his entire life? Studying nature. You adapt or you die. It has nothing to do with your strength. Strong animals will die if they don't adapt to changing conditions. Let me ask you, and this is a rhetorical question, so you ask yourself. And if you are really serious about becoming like a champion trader, you would actually write this down and think about it and then write an essay. Are you able to adapt to changing market conditions? Write it down. First thing is to write it down. This uses multiple parts of your brain. If you don't write it down because it's too much effort, dude, seriously? You're trying to build the strength for patience and discipline, and you're like, yeah, but I'm too lazy to write this question down and then go think about it. I mean, really think about it. Think about it for hours. Think about it for days. Take notes, jot down ideas, and then actually write down maybe an essay to yourself on what does it even mean to be adaptable? How do you know to be adaptable? How do you adapt? You don't have, like, are you going to be the master of the universe or of mediocrity? Okay, Cool. So we could literally just sit here doing this. What do you want to do? I am very excited about not losing money. How about you? That's a pretty good day, right? Are you throwing down money right now? Are you throwing down positions right now when nothing's happening? How does that make you feel? Do you believe you'll be successful trading when the market's not moving? You're like, oh my God, this is so good. The market's not moving. I'm going to throw down a bunch of trades. Imagine that you're a sniper. Most of your job is observation. Oh, you're patient and disciplined? Uh-huh. Hey, why don't you climb up that rocky hill, lay down on your belly. It's only 140 degrees Fahrenheit, but go ahead and cover yourself with a blanket and lay on your belly for 3 days. Don't take your eye out of the scope. Don't stand up. You're going to have to pee in a cup. Sit there for 3 days and watch. You think you got patience and discipline? Do you? I don't know you. These are questions you should ask yourself. And to me, like in my book, I talk about not knowing any Forex traders when I started. So I sat down and I really thought. Like, I put a lot of thought into what I do. And I sat down, I'm like, I don't know. I've never met a Forex trader. I don't even know where they live. I think they live in these giant banks somewhere. They all have Ivy League degrees. And I'm just a nobody. So I don't even have the ability to meet a real Forex trader. This is true in the very, very beginning. You have to understand, I was a keynote speaker at the very first Forex Trading Expo for retail traders. So when the industry started, I was the expert, but I'd never met a Forex trader. So anyways, I sat down and I said to myself, and I put a lot of thought. If I met an amazing, experienced, successful Forex trader, what is this person like? What do they do? How do they think? What is their day like? What is their process? Right? And I created an imaginary mentor. Yeah. Which is crazy because with TradeRs, I've made an imaginary version of myself. So when I log in each morning, I hear Aiden, but it sounds like me. It's me talking to myself. Hey, Wayne, this is what you missed while you were sleeping, which wasn't for very long. But, hey, while you were gone, I was watching the market. It's really cool, right? So patience and discipline was definitely part of this avatar that you say now in business school. Okay. This trader would have to be patient and disciplined. All right. How do I practice patience and discipline? Right? And then I would think of things like stress. They deal with stress well. So, how do they avoid stress? How do they handle stress? How do they recover from stress? And even minor stress over long periods of time versus just crisis. Well, if you avoid the crisis, then there's still ongoing stress. How do you deal with that? So that's where, for many years, one day I just decided I'm going to wear my watch on my right hand, not my left. And then I put my wallet from my right pocket to my left pocket. And that's funny because this is 30 years ago. And then I got sick of that. So I decided to put my wallet in my front pocket. And I didn't like it. It was uncomfortable because I'm not used to it, which is a form of stress. And I still do it today. I just forgot. So I've been doing that for decades. But it's little things like that, that help me. You think it's minor, but it teaches your brain how to deal with these things. So you're not so aware that your wallet's in your wrong pocket or your watch is on your wrong hand and this is driving you nuts. Why? What's your frickin' problem? You can't handle that? Well, how are you supposed to handle a basket of carry trades going sideways on you? Right? Like you have to train your brain on small things and medium things and larger things. Right? I learned a lot of that at NASA, by the way. NASA taught me a lot about stress management because they would put me in stressful situations on purpose and measure the impact. Because I flew, it was before virtual reality, but it was virtual reality, right? So NASA had virtual reality simulators, and yes, goggles over the head, that kind of stuff. And stress test me. Yeah. And after a while, you learn to handle it. You're like, oh, alarms are going off, lights are flashing. I have something to do, but now I have to respond. Got it. Right? Military pilots get put through training like that. So anyway, we all have to go through our process. We all have to have our mentors. Mine was invisible, made up, never met the guy. But now I can sit here like a sniper. Just observe. But Wayne, I got to do something. That's not smart. I'm watching all 28 charts right now. Now, of course, this is just Forex right now. I'm going to put in other things. Like other things might be moving, and you'll see it here. Okay, so look at energy. Okay. So most likely that's what you would be doing, not Forex. Or you'd be trading the stock market, not Forex. Okay. So we have the data. I just need to put it into a signal. But this is Forex.Today. So look, you're trading Forex. There's nothing interesting unless you're doing something different, right? You're not doing majors and crosses. You're doing exotics and okay. All right. Let's get an update.
Good morning. Let's get you up to speed on the global macro landscape as the European session takes shape. While the broader monthly trend remains firmly risk on, today's session is displaying indecisive and neutral sentiment as the 1D risk score suggests a flat start. The rise in the U.S. 10-year yield to 4.605% is providing a tactical tailwind for the U.S. dollar index, DXY, at 99.295, while weighing on gold and causing a mixed performance across global indices. 1. Australia's unemployment rate rose to 4.5%, which was higher than the 4.3% expected. Oil prices have jumped over 2% following reports that peace talks between the U.S. and Iran are facing new complications. In the U.S., the Philly Fed index unexpectedly turned negative for May, while gold prices are sliding as bond yields and the U.S. dollar move higher. Keep an eye on the upcoming U.S. PMI data for the next move in equities. Biggest movers right now: high yield bonds, WTI crude oil, Brent crude oil, NASDAQ 100, and VIX are up.
Interesting, huh? Steam big. Yeah, this is quite complete. Yeah. 28 minutes to PMI. Eurozone consumer confidence. New Zealand retail sales. UK consumer confidence. Japanese inflation. UK retail sales. Boom! There we go. Canadian retail sales. I don't know. It kind of looks like it's falling back to normal. There's a giant spike there, but wasn't there like some sort of tax cut or something? Anyways. Cool. Nice. Get a sense of what's moving. Yeah. Nikkei up, though. Interesting. I wonder if that's going to collapse tomorrow. What do you guys think? If we have a 3% move up in oil, when Japan wakes up, is that going to crash the stock market? Well, that's a pretty good question. So let's see if we can answer it. Okay, if WTI is up, do we have that? We'll have to stocks. Don't have it. Let's see if we can reverse engineer this. Do I have NASI? Wait, no, Nikkei. We're doing Nikkei. Okay, Nikkei. Okay. Weak positive. Really? If Nikkei is up, WTI is up. If Nikkei is down, WTI is down. That's interesting. I wouldn't have thought that. Well, then this makes sense. I mean, we just looked at the data. They do pretty much the same thing. Check that out. How funny. Apparently that's normal. I would have thought the opposite. Well, what I think and what is real is... So anyways, interesting. It's great to have the data because sometimes it's not the same as it often is. Good to know. U.S. Yeah, up. Most things are, yeah, between, what would you say, 0.5%, one way or the other? Yeah, when I look at this, it's definitely a mixed bag. Like, U.S. stock market's up, and yet dollar is strong, you know? Stock market's up, but oil's up. So is the stock market going to crash today? Is that what's going on? Well, then the dollar would be strong. So when you go to the sit rep report, nothing major is happening. The biggest concern, of course, is we're back above 100. Now, even if the conflict with Iran ends soon, I'm not saying it is, but let's say it does. It doesn't change things quickly. Yet it's kind of priced to change quickly. So like suddenly you might see oil drop back down to 75 or something. That's very nice. But let's just say like 85 is more likely. But let's just say when you look at the price of oil dated into the future, 75 to 80, right? So if it does drop to that 75, 80 level, I think the future is still overconfident. You just can't reboot such a big industry very quickly. It'd take a long time to clear out the Strait of Hormuz, and then we got to drain everything in inventory. So, I don't know. It gets interesting. And one of the things that we are tracking is, how low do supplies in inventory get? And, excuse me, I didn't sleep enough. If you draw down oil supplies and there's no oil, or let's just say not enough oil available to refill your supply, what do you do? And if everyone else's supplies are low, and they all kind of desperately need that oil, even with the Strait of Hormuz open, well, we're like 1 billion barrels short right now. Now, we have a lot of that some of that in the ships, the several hundred ships waiting in the Gulf. to get through the Strait of Hormuz and back out. Okay, great. But that's not the billion. That's not even close to the billion that normally would have been shipped by now. So we have oil in storage waiting to be put on the ships when they return empty. So it takes a while. But since there's nowhere to put new oil because we've been putting oil into storage and there's no more storage and there's no more ships, you have to turn your oil drilling and your oil production off. I don't think it's like a little button where you just say, okay, turn this oil well off. Okay, turn that oil well off. There's a process to it, and it's not easy, and it's dirty, and it's hard work. I have a lot of appreciation for the energy industry. It's hard work, and it's solid science. Okay, so let's say countries around the world, right? Let's say like Iraq, for example, they shut all their stuff down because there's nowhere to put the oil. What are you going to do? Just pump it into the ground or pump it onto the surface? That has happened in history. You just keep the pump going because it's cheaper to just lose the oil. Well, not at $150 a barrel, right? So it's better to just turn the production off. So now you can get in this situation where the war is over, Strait of Hormuz is open, oil prices drop like a ton of bricks, and then we find out everybody at the same time runs out of supply, so suddenly everybody needs the oil that's on the ships. The ships are already at sea doing their deliveries, so then what? They come back empty because you can't just make an oil tanker overnight. So there's only so many tankers, and many of them are in the Strait of Hormuz. So they come out, and then they go back empty. Okay, fine. Then we have to drain the storage. So then we go through that. Meanwhile, if we run out of storage, how soon does it take to restart production of thousands of oil rigs? Each one being hard, slow, dirty, dangerous work. It's not that quick. It's like saying, oh, we just got to fly to Mars. It's no big deal. Dude, flying to Mars is a big deal. Okay? Yeah, turning off an oil rig and turning it back on is a big deal. So, well, boy, this could get chunky. Up and down, up and down, up and down. Yeah. Ooh, market's waking up. Dollar is getting a little bit stronger. Aussie's getting weaker. So yesterday was a risk on day, and Aussie and Kiwi were ripper strong. Dollar was slightly weakening. Yen was weakening. Swissy was weakening. And now oil's up. Stocks are likely to be down based on correlation. Dollar's likely to be strong. So that's a lot to digest. So we go here, and Aussie dollar down. Makes sense, doesn't it? It's the only thing you should be looking at right now. And right now, the reason it's flashing on and off is it's borderline. The conviction on this one is 3. But remember, if the stock market opens down and oil continues up throughout the day, this conviction score will get stronger, as well as other similarly correlated currency pairs will pop up onto the screen too as the market is moving. So this is the first one that you should be looking at. Okay. Yeah. You remember this one? It dropped more. I tried to buy it at the open. It was funny. The spread was too high. And then the double bottom occurred overnight. So that would be a plan B scenario. But that's still our target. Kind of interesting. But Aussie dollar, Aussie dollar down, huh? Don't tell me. So that is our plan for today. We did this last night. And our target is 70. So down 120 something pips. So I already did all of that yesterday. And winner, winner, chicken dinner. It's waking up right now. Okay. If you look at here, it's the most bearish swing that we have right now. Aussie dollar confidence of it falling is very significantly high. So now all you have to do is enter a day trade in that direction of your swing trade. And you're Oscar Mike. You're on the move. I don't know. Does that make it too easy? Wayne, what's the number one swing trade opportunity right now based purely on price action? Sell Aussie dollar. Cool. So today I'm just going to wait for opportunities to sell Aussie dollar. So if Aussie dollar bearish pops up on the screen, I'm going to jump to my chart and look for a technical reason to enter the trade. What do you guys think about that? Is that a good methodology? Strategy and tactics. Boom, 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 boom. Yeah, he's doing too many calculations. Yeah. That does right. I haven't pulled that up in a long time. Just want to check it. All right, so there you go. US initial job list claims 209 KVs to 11K EST, close to expectations for weekly jobs. United States continuing jobless claims registered at 1.782. EU cuts Eurozone growth outlook. Okay, let me answer this question. Yes, it's too easy. What if things change fast? They do change fast. So let me go back to what we were talking about. Okay. Because now we don't have that Aussie trade up here anymore, right? So let me address this. We do 420 calculations per second. So this is real time. We're extraordinarily close to real time. Okay. The price changes here are also real time, but measuring the percentage change over 7 days instead of 24 hours. And this one, real time, but percentage change over 30 days. So the way you do this is, okay, so today is swing trading, right? So we do our swing trading group Thursdays at 4. So typically what we would do is we would start with bullish and bearish opportunities. And we have conviction scores and everything. We have no real strong conviction for anything bullish right now. We're much more convicted, have much more conviction for bearish opportunities. Aussie dollar, Kiwi dollar. And actually, those are our best too. So we're going to analyze that in greater detail. So imagine you live in a world where all you know is you're interested in selling Aussie dollar and Kiwi dollar for the next 7 days or more. That's it. You're not interested in anything else. Okay, Prince? You have the data. You're like, well, based on swing trade analysis, okay? And of course, this being updated in real time, these are the two things you want to focus on right now. See, look at the conviction score. 5 and a 4. Nothing else has 5s or 4s. Nothing else is worth your time. Okay, so you are looking for every day and throughout every day selling opportunities of Aussie dollar and Kiwi dollar. This is what you do now. Well, that's right, Julie. Okay, because normally we're risk on this time of year, and normally investments are made by macro analysis. Normally you make trades and investment based on, excuse me, based on you want to build a factory in Australia because you believe demand is going to increase while global GDP increases. And in particular, maybe GDP in Japan is increasing. So you believe in demand from China will increase for foreign products. And so Australia is nearby. So you're like, oh, I'm going to build a factory there. It's going to need $100 million to build this factory. So you got US dollars. So now you set up shop in Australia, but you convert your US dollar to Australian dollars so that you can hire local, you can buy land, you can buy or pay local workers, and you manufacture your plant, and you spend your $100 million there, right? And then you start doing business with China. That's how it normally works. Right now, we have a reserve currency at war. We have the largest economy in the world at war. We have energy supply shocks, exogenous energy supply shocks with Venezuela and Iran, effectively reducing 20% of the world's energy. And we used to have a lot of oil inventory, so we weathered the storm pretty well up until now. But I think we only got a few weeks until we get into serious trouble. So don't be shocked if we're a couple of weeks away from a resolution. But even then, there's no quick out. So we have to deal with that too, okay, Julia? There's normal, and then there's now. There's long run, short run. We have to fully understand both. So, for example, I was saying, are you adaptable? Well, to be adaptable, you have to know what the environment was like before. You have to understand normal. What was normal? You have to understand what the normal reality is to therefore be able to even observe that something abnormal is happening now. You're like, weird, it doesn't really snow in July that much in the northern hemisphere. So you're like, well, that's abnormal. Snow. These things happen. I tried to go camping one year in May. And I get to my camping spot and there's 6 feet of snow still. But where I live was warm and beautiful and sunny and had been for months. Then I go to my camping spot and it still has 6 feet of snow. Couldn't even get onto the road when you turn off the main road. And you're like, the side road was 6 feet of snow. Oh my God. So normal first, then abnormal second. Okay. So think of things like seasonality. 20 years of normal. So that seasonality and macroeconomic comparison. So normally, if Australia has high interest rates and Switzerland has low interest rates, normally you would create a carry trade, Julia. You're like, I'll take the high yield. So what you do in the United States is you take 1,000 of your US dollars in your brokerage account. And then what happens is you say, go long Aussie Swiss franc. So therefore, then your US dollar is in your bank account, your $1,000, it's used as collateral. So you go to the Swiss National Bank and you say, hey, my client is willing to put up $1,000, 1,000 US dollars as collateral. What kind of loan will you give this client? And they say 100,000. Actually, in the United States, it's 50,000, right? Okay, $50,000 worth of Swiss francs. So now you have $50,000 worth of Swiss francs, but you only put up 1,000 as collateral. Now you got 50,000 Swiss francs. But you don't want 50,000 Swiss francs. It doesn't pay you any interest. So you're just holding air. Now, some people like that. But you're like, you know what? You take your 50,000 worth of Swiss franc and then you buy some Australian dollar and 50,000 Swiss francs of Australian dollar, and you put it in an Australian bank account or money market or treasury. And they pay you interest on that, right? So if you put it in the money markets, you're picking up interest payments. Let's say 4%. Well, let's say normally it's closer to 5. So let's just say 5%. And then normally interest rates are not zero. Let's say 1%, right? So what's the difference? Okay. You have 50,000 Swiss francs of Australian dollar, whatever that number is. And you are collecting interest payments. You're essentially loaning it to the Australian government, and they're paying you an interest payment. But on the 50,000 Swiss francs of Aussie dollar. Yet you've only put up 1,000.
United States S&P Global Composite PMI is released
Of your own dollar. Okay? So this is important because this is how the Forex market normally works. And there's seasonality and ebb and flow for all of this. Supply and demand based on logical human business activity. But yet this year there's a war. Okay? So, right? So the contrarian radar is based on the fundamental analytics of Australia versus Japan, or Australia versus the US dollar. Okay? Which is that normality. And what we call it a contrarian is we give it a score, and if it's the same, it's good to know. If it's the opposite, that's good to know. Meanwhile, the synthetic indices are just telling you what is happening right now. It's not thinking about seasonality and fundamentals. It's just doing price action. And so that's where you want to say, look at the medium term like swing trading and line up the short term like day trading. And this is what I've been teaching for 25 years. Strategic and tactical, long-term and short-term aligned. All right. So, anywho, oh, we got a bullish signal. U.S. dollar is strong. Look, you're buying dollar. Interesting, huh? All right. So you could just sit on this all day. Lining up your day trading with your swing trading. So if you are, if you've upgraded your free Traders account, by the way, it's no joke. What you get for free is going to shock you. But for those that have upgraded to live coaching, today at 4 p.m. Eastern Time, we are going to plan out all of next week. So it was a beat on that number.
United States S&P Global Composite PMI, actual 2.45% beat forecast.
Oh, it works. It's so good. Oh! Oh, my God. Dude, freaking amazing. I've been trading a long time, and I like trading. I like doing all the analysis, and it's always been very complicated. It's still very complicated. A very complicated discussions, if you will, aid in it, because I'm building all of this. This is me training a large language model to think the way I trade, and I'm like, you know what I need? I need this. You know what I need? I need that. Oh, I need this other thing. And wouldn't this be cool if I had access to that? And like, it just popped up, and they're like, hey, the PMI was a beat. And now I can track the change in currencies in real time and get on the right thing at the right time. Like, oh my God, I built this and I'm stunned. So now we can just sit on a page and just do that. But if you wanted to do deep dive and know how much gold is being purchased by jewelry manufacturers, we have that data. Like, shut the back door. Dude. So I am super ridiculously happy. So like I said, if you've upgraded your account to the live coaching, I will see you at 4 p.m. What do you think of the dark mode? These are not quite the right colors. He's been struggling with it, but yeah, we're working on it. Okay. Peace on earth. May the pips be with you. May our profits be above average. I have an exciting accounting meeting to go to. Hey, do you want to hang out